Did you know that the way investors finance real estate is changing dramatically in 2026? If you're buying rental properties, commercial buildings, or looking to expand your portfolio, understanding today's lending options could help you secure more deals and grow faster. Let's talk about the top real estate lending trends investors should be watching right now. One of the biggest trends is the continued growth of DSCR loans, also known as debt service coverage ratio loans. Unlike traditional mortgages that focus heavily on your personal income, DSCR lenders look at the property's ability to generate income. This makes it easier for many investors to qualify, especially those with multiple properties. Another trend gaining momentum is bridge financing. Bridge loans help investors move quickly when opportunities arise. Instead of waiting months for traditional financing, investors can access short-term capital to acquire properties and refinance later. We're also seeing increased demand for fix and flip financing. With many investors seeking undervalued properties, specialized financing programs are helping them purchase, renovate, and resell homes more efficiently. Commercial real estate financing is another area attracting attention. Many lenders are offering flexible solutions for office spaces, retail properties, warehouses, and mixed-use developments. The common theme across all these trends is flexibility. Investors are no longer relying on a one-size-fits-all financing solution. They're using multiple lending strategies to maximize opportunities and improve cash flow. If you're planning to purchase investment property, refinance existing assets, or expand your portfolio, understanding your financing options is critical. The right lending strategy can help you move faster, preserve cash flow, and position yourself for long-term success. If you'd like to explore funding options for your next real estate investment, schedule a free consultation using the link below. And don't forget to like, subscribe, and follow for more business and funding insights.